The last two bull market tops in Bitcoin's price, including the one that formed around the Russia-Ukraine war, were indirectly driven by a sustained rise in oil prices. This becomes clear when we bring in this dataset that tracks whether oil is trending higher or lower over time. We can see that the last two Bitcoin peaks, so here in 2018 and here in 2022, occurred right when oil prices shifted into a strong and sustained uptrend. And that's because oil influences the two most important factors for the economy: growth and inflation. First, let's look at growth. When oil prices rise sharply, they act like a hidden tax on economic growth. As households and businesses see energy costs rising, they naturally start to cut back on spending in other parts of the economy. Eventually, that creates a drag on overall growth, and we can see that through this chart showing all the major oil shocks going back to the 1970s. In almost every single instance, when oil prices spiked by more than 30% in a short period, it ended up triggering a recession, which is almost always bad news for risk assets like Bitcoin. The only exception where an oil shock didn't lead to a recession was here in 2022, but as we just covered earlier, Bitcoin still saw a big decline during this period. The other big impact of rising oil prices is on inflation. You see, as oil rises, inflation tends to pick up alongside it. And once inflation heats up, central banks are often forced to push interest rates higher to control inflation. We can see this relationship pretty clearly by looking at the price of oil against long-term government bond yields. It's not a perfect one-to-one correlation, but they do tend to move in the same general direction. For instance, heading into 2022, oil saw a 150% rally, and just a year later, government bond yields went from 1.5% to almost 5%. When yields go up, it means the cost of borrowing across the economy is rising. That pushes people to save more and spend less, an environment that's not particularly constructive for risk assets like Bitcoin. And we can see this by zooming in on this chart and replacing oil with Bitcoin. Back here in 2022, as long-term bond yields were climbing, it put downward pressure on Bitcoin's price, resulting in the 70% decline we mentioned at the beginning of this video. Once yields stabilized from 2023 onwards, then Bitcoin finally found a bottom and has been trending higher ever since. But now, if bond yields were to start rising again because of another oil shock, like we saw in 2022, that could potentially put an end to Bitcoin's current bull market. So to put it simply, through its impact on both economic growth and inflation, higher oil prices have a significant influence on Bitcoin's performance.